Hello, this is an education series number 3 about candles. Today we're gonna talk about candles. I suggest you to watch with 1.5x speed for better viewing experience because I talk a bit slow in English. So let's talk about wicks and candles today. A candle is usually what is helping us to check where the price is going, how much volume is in that current moment in the market, where is support, where is resistance, what is the trend, where are the rejections, where are continuations. So this is a normal candle. This is the wick of the candle. This is the body of the candle, and the wick of the candle is where the body of the candle is where the price opened and closed at a certain time frame. For example, at the moment we're at 30-minute time frame here, and then this candle opened here, and then after 30-minute mark it closed right over here, but at some point within these 30 minutes it was up to this low and then up to this high, and then it closes like this. For candles that closes like this, basically with no wick on the top or no wick at the bottom, it means that at the end of candle closure the price was at that point, at their lows or their highs depending on where is closing. These are another type of candles which are more exhaustions candle. We can see that after majority of the time price tried to push up, but then it got rejected multiple time and then has a small body closure, which means that usually there is a rejection in this area, and it's not very good to go ahead and aim for these areas. This is the same case for the downside. Price open at this point in this candle, came to the downside, found all of this rejection, and then closed here, and then the next candle should just keep going up without breaking these lows. But it depends obviously on the trend. You cannot just say because of one candle, but a candle tells us the direction or the volume or the strength of the momentum. And yeah, there are different. For example, this is a very healthy candle, a very good candle for the continuation of the bullish trend, because I mark them as green, so we're in a bullish momentum after this candle. Then you have these candles which are called as doji candles. These candles don't usually tell something, they're just, because of their no bodies, like indecision candles are called also as indecision candles. What one of my mentors, what he used to do, he just went and just made them like this, full white, and then just make them disappear, didn't look at them at all, because that's what he said, it's work for him. So one candle usually is consist of multiple candles. It depends also on the time frame. So let's go ahead and delete these candles that we made here, and let's go ahead and check the real candles that we check. For example, this is a 4-hour candle which opened at, as you can see here down at the bottom at the time, at 7 p.m. in my time, and then you can go ahead and see that at 7 p.m. price started here. So that 4-hour candle is consist of these 4 1-hour candles. So one 4-hour candle is built of 4 1-hour candles, and this is very important because, as you can see here, for example, we have a clear exhaustions here, and then we anticipate the next candle when we break the high to continuing to the upside. But then obviously this is also, for example, 7, it should be at 3 o'clock from here, then we break the lows, then we kept going up, and then we rejected this, so we create this whole wick on the 4-hour candles. So it's very important to determine this, because when you are at the 4-hour close and then you are at 30 minutes before 4-hour close, like we are in this case, we have to anticipate how the 4-hour is closing. For example, if it's closing like this, we can anticipate that the next 1 hour will just range here. If we anticipate that we need to break this support here confirmed on this candle, then what's gonna happen on the 4-hour? Is it gonna break new lows? It's gonna break new supports on the 4-hour. That is very important, especially for example on the 1 hour time frame. 1 hour time frame is 2 30 minutes time frame or 4 15 minutes time frame. So the next you can have, for example, one 4 hour, one hour time frame candle like this. For sorry about this. You can have one like this. Let's say bullish. And then you just made it like this. So you have like this candle, but then the first three candles can be like this, for example, and then the last candle can be like this. Rejecting this area here, because we should have closed right over here, right over here, right over here. So we are rejecting these highs. So this is where this wick has been formed, or let's say, for example, something like this. Actually, it can be something like this. Anyways, this is just the wicks. Let's not be very tedious about everything. We can just anticipate it something like this. And now if we anticipate the next candle, the next so let's move this one right over here, so we have a clear drawing. If we anticipate the next 1 hour candle to come and be something like this, that's gonna mean a continuation, but then we have a wick. So from here we can anticipate that price is going a bit to the downside. Let's just move them right over here. It's going a bit to the downside, and at the same time is creating the wick, and then the next 15 minutes can be just a support like this. And then as soon as we have this support, we have this new high here. We have this new high here, we have this closure here, and now we have the wick starting to form. The wick is starting to form to the downside here, where this whole move is coming, and now we have this bit of support. We anticipate that the next candle, the next 15 minutes candle, can at least come up and retest these highs and fill these wicks, because we already formed this wick here on the 1 hour, which is these two candles, and then we confirm support here, and then we come to the upside. So this is the idea of understanding how lower time frames can come up together and align with a higher time frame frame or picture in this case, where we have these two 1 hour candles coming printing one after the other, and then what will happen on the 15 minutes. So you can have an entry, for example, here with stop loss here, anticipating that price will not make a new low here, and as soon as we break the high we should be good to go up at least to this level, and then potentially come up to this candle right over here, and then create this new pattern, not new pattern, but this very well repeated pattern to in the charts. So yeah, this is now. Let's go ahead and, for example, check on the real market. Let's say we have this 1 hour candle here. We had this week. We've started a formal 1 week. So let's go ahead and 15 minute at 10 a.m. in the morning. We can see 4:30, 4:45. This is where the candle open. For example, at 9 o'clock, this is where it opened, and then this is where it closed. So next candle, we already saw rejection. This is the wicks that is formed, but we already created the last 15 minutes of the 9 in the morning of the London open candle, already found support, already broke about these levels, already close about these levels. So as soon as we break the high, we anticipate that the next 1 hour candle will move up. So we go on 15 minutes and we check support is confirmed with this candle. As soon as we break these highs here, we should be good to go up with stop loss below here, and this would have been an amazing entry today with 15 pip, and then 15 pip, 70 pip, all the way to 40 pip move to the upside. But you have like 8 a.m. you have here. We would anticipate, let's say, how was the 9 a.m. or 8 a.m. 8 a.m. candle closure. The previous candle was bullish. So 8 a.m. 7:30 we have at 7 we open here, and then we closed here. So this candle was bullish, anticipating a support here, and then as soon as if we break these highs here, we should have be good to go up. But then you have all this rejection here, and then the next candle we anticipate to move up, and then when you see all these rejections, you don't act, you don't go in the trade, because it's against the 1 hour. If the 1 hour is breaking also the lows, you wait. You wait, for example, in the London Open, where the volume comes in, and then all the other time frame aligns well. So yeah, I hope this video will make you at least understand something, hopefully. I'm not really sure, because this is a very deep topic and requires a lot of self-learning on this. You need to go ahead and check this, but try to the higher time frame and lower time frame on the candle formations to align a bit. Like, for example, you have this 1 hour candle. Try to see where these 4 15 minutes candles should work their way into this, forming this only one candle in the 1 hour, or 4 1 hour candles into the 4 hour candle, and check if the last minute of 15 minute of the 1 hour. For example, here you can see at 8 o'clock, at 8 p.m., at 6 p.m. we open, but we closed bearish here. I believe we open right over here, right, this candle. We were bullish, and then we closed right over here. But you can see this whole wick to the upside coming close, showing very big rejections to the upside, and then breaking the lows, again making this rejection, next candle just slamming the lows here, and then here would have been an amazing sell with stop loss above here, or waiting also after this candle. With this whole move we could have got down if it was during the normal sessions where we trade. This is a complicated topic, it's not easy, but you have to check and understand the body, the wicks. For example, here you can see exhaustions wick, doesn't mean support form. We have huge momentum and then a big rejection because we went on this demand zone area right over here. All this range here is a demand now. We went there, we closed above, break above, and then just start to move up. So, and then here, for example, we move up, we hold this rejection area to the left hand side. You can see this whole demand, this one here, whole rejections, these big wicks here also, as you can see, big wicks here also, big wicks. After these big wicks you must be careful and not jump into a trade, because usually there is a change in direction. Here is a big wick and now you start to move slowly down, but this is no volume, no high volume times, but just be careful of big wicks. Go ahead and find. For example, this is a very healthy candle, this is a very healthy candle, that's why you have all these continuations to the upside. This is a very healthy candle, that's why you have this continuation to the downside. We go ahead and we check where the normal candles are after this week. Wait and see, because even though the momentum is to the upside, this big rejection, big wicks should tell you a story, or should make you cautious a bit of what you're doing. And then after you go into a trade, you try to check all the small candles. For example, in 1 hour you go and check 30 minutes or 15 minutes candle, how they can form in a way so they are also aligning with the 1 hour, how the 1 hour's candle can form so they align with the 4 hour candle. These are very important stuff which everyone should have them into the back of their mind when they're doing an analysis, because obviously analysis come down to the setup and to the rules that you have for a setup, but also every scenario is a different scenario, and then you have all these major concepts like candles in this case, where they can make you cautious of it. So sometimes save you money, sometimes not going into a trade, and sometimes you lose money obviously if you have, because not every time they align you in the right direction, but most of the time it's good to have them in the back of the mind and have them aligning with your trading plan and with your trading setup. I hope this video was helpful for you guys, and I hope you have a safe trading journey, a profitable one. I see you guys on the next video. Thank you for watching. Like and subscribe to support the channel.